Hello, this is Dave, and welcome to Equity Story. I'm with Wolfie, and this is just general share advice and not personal. Wolfie, how you doing, mate? What did you talk about yesterday with Claude? What fundamental stories did you fundamentally talk about, or were you just looking at the charts?
No charts allowed on a Wednesday. Dave, we always have to bloody look at charts. I'm just being ingrained now that we know to have the chart, something's wrong. So it's like, I'm missing a child.
But
because we had the end of the reporting season, we actually didn't have much to talk about as in news-wise, and we don't have news-wise today either, so we're going to talk about something different. So what we did was we reflected back on the last week and say, okay, what impressed us, right? Company-wise, reporting-wise. So we picked 3 stocks. So just to recap on the 3 stocks that from yesterday, I chose my little favorite, DSC, because I thought it was an inflection point, right? So if you want to just bring that up on a chart just to show everyone where it's at right now.
Which one?
DSC.
DSC. Yep.
So I brought that up as my pick. And the reason why, like I said, if yesterday, just to summarize, was that it was profitable, Dave. For the first time, it has a PE. Like DSC has a PE. We've made it.
That's fantastic.
That to me, Dave, smacks of we need a re-rate. So that's why I thought we got to have a celebratory drink, and hopefully over the next 6 to 12 months we'll see a re-rate and maybe get to that 30 cents. So that was mine, right?
You know what's funny about how the way stocks move? As long as the story holds up, even as soon as this stock, as soon as it gets that breakout, it'll most probably have a run.
Yeah.
Right. That you just got to hold in and just be patient and believe. That's all you can do.
Exactly. All right. So the other 2 stories, this is Claude's stories, but I like both of them. One of them we actually own our fund. So the first one was EBO, and it's a long-term great chart. And this is one probably, it's a hold for long-termers out there, right?
Yeah. Listen, I'd be buying that, to be honest with you.
Well, we said yesterday, if I'm a long-term investor, I'd be buying this as well. That's what we said yesterday, right? We said, if you like this story, and the story is actually quite good, you're buying this. For the long term, you're buying this. This is a really, really interesting story. And the last one we've got is XRF, right? That was the other of Claude's that he liked, which, by the way, we're going to have a chat to the CEO today. So again, a pretty interesting story, looking pretty good. Another one that's, you could possibly see another great 6 to 12 months out of. Brilliant. So that's the sort of 3 story. We obviously starts looking good, but it was more about fundamentals. We talked about why we like it, why these stories still make so much sense for the next 12 months.
All right, Wolf. You know what I thought we did today? We've had a really busy season. Recently we put out a number of hot stocks.
Yep.
Some were hot and have got hotter. Some have got steaming hot. Some got very, very cold, very, very quickly. And some just were sort of are still simmering on the cooktop. So I want to go to one that's simmering on the cooktop, right? So I'm going to go back about October last year, right?
Okay.
So we had the great Andrew Page. So he came in, he's doing some work with us. We've got to get him back, actually. We've got to do some more work with Andrew. Lovely guy. We had so much fun with him. So we asked him, his favorite stock, right? There's this little play called SGI, Stealth. And it's quite interesting because they just had an announcement recently. This company's got 11 million in market cap. It's got about 103, 104 million annual revenue. They're targeting 200 million annual revenue. He just thinks it's ridiculously cheap. Again, they had a great announcement recently. So is the stealth story still on, or are those margins just a little bit too tight for you to get excited?
It's interesting, isn't it? Because, when you're thinking about it, what makes a company cheap? So say, for example, they had $1 billion in revenues and they were not profitable. And if market cap was like 11 million, was that also cheap?
Well,
It's intriguing, isn't it? What investors would make it cheap. So
Well,
look,
you could have a wee bit with no
I know,
no revenue.
It's pretty strange, isn't it? How investors treat some of these companies, and what makes it sound.
It's on potential. The market is forward thinking, right? So if you take Weebit, who've got no revenue, that's trading at about just under 1.5 billion market cap, right? So you've got little SGI, it's got 100 million revenue, and still trading at a little 10 million market cap, which seems okay. Even if they've got issues, they you think they should be worth 16 cents, or just
at least the downside's limited.
Yeah. Well, that's why it's interesting. Now, it hasn't really done much, Wolf. It's hovered around.
I think, Dave, I think you're right. I mean, just to summarize SGI, it just needs to probably improve its margins and become a bit more profitable, right? I think that's the key here. And while they've had a obviously jump towards the profitability, it's still just right 0.3 million or 300,000. It's not. It's nothing. I mean, you could just manipulate some numbers to do that.
Yeah,
right.
yeah.
So it's not here and neither here or there. So I think the crux of it, the investors want more out of this. They want to see on 100 million in revenues. They want to see more before they push it up. And if they do that, it could easily double, right, on that stick. So you've got that possible here story where I can see where Andrew's coming from. If they can hit some targets, improve some efficiencies, get the margins up, you could see this higher. I mean, it's nothing exciting. You've got a business that's a distribution business and so on. But they've got a value somewhere, right?
Yeah, well, they've got 5 million cash. They've got sort of 6 million debt. They've got a credit facility. I think those assets are some shops as well. So those net assets, are they?
I don't know. They're probably because I'm inventory, Dave. I'd say that's what would be the net assets.
Okay, all right. I think they've got 70 stores. I remember reading about them. And
okay, no, I like I said, I don't follow the story, but the fact is that the market just wants some more out of this before they really maybe start looking it out. But that's the issue. Can they do that? And I know they're talking big, right? Because we looked at it. We looked at it just before we went. They're talking about 2025 targets. And I like when a company comes up, stating their targets, like they can hit them, great, right? We've got something to look forward to it. Can they, is the question. So this is why maybe the market just needs a little bit more time.
It says here we now have 70 company owned or independent stores. So I don't think they own them all. I'm sure they're renting some of them, right? So I don't know.
Distribution network. So does that mean they've actually got some stores they sell to that are independent or coming up? I don't know.
Yeah, so we need to maybe we need to do more of a deep dive. But Andrew has done a deep dive into it.
He's obviously done it for you, right? So I don't follow it. So this is a little bit baby. So let's hope. It's still a hold, right? I mean, that's the technically thing speaking, it's still a hold.
Yeah, and I think, like you said, if they can improve their margins, maybe this could give it a year. This could be a doubler, right? Now, the next one is BDM, which actually had a really good move since we put it up. And it was actually up, I think we put it on around here. And it's had a nice move. I don't know what that is, 25, 30%. They are in a trading halt at the moment. And what it is, Wolf, they're buying another company. Now, just so mums and dads understand this, and I'm learning about this as well, obviously being in the position I am. So if you're a publicly listed company and you're buying a company, that sort of company you're getting involved in, that has to be the sort of in your prospectus, and that has to be, what people invested in your company to buy, right? So obviously, what's happened, they're buying something which is maybe not diamonds, or could be
something very different, right? So
it could
the nature of the business.
Yeah, and then so what happens then? Companies then go into a really big long argument with the ASX, right? And there's two. They either say, "Well, can I have a I can't remember. It's this clause or that clause." And if the ASX say, "Okay," then you just need a shareholders meeting to ratify that change of direction. Otherwise, it could be a new prospectus, right? Which could be a pain in the bottom, right? So hopefully they don't get that. But again, the story's on the right on the way up, and hopefully that whatever they're buying will be something
Well received. Let's hope.
Well received.
Because that's the key, right? Where there's going to be the problem is, Dave, it's been suspended for 3 months right now. So investors are sitting there going, "What the hell is going on?" They're probably thinking to themselves, because it's not normal to sit. It's suspended for 3 months. So, like you said,
Well, it's annoying because someone could be trading it, right?
Yeah, absolutely.
Well, yeah,
you don't want to have your money stuck somewhere where you can't take it.
Well, definitely, especially some of our guys going to be up 20-30%. They figure I'll take a profit and then bang.
Yeah. So we just got to wait till it comes out of suspension and see what they're buying, if it actually comes to fruition, because you never know, Dave. I mean, it might actually happen after all this time.
Yeah.
Because
my gut, and I don't know what they're buying, but my gut, I think they're looking to buy those no, I think they're looking to buy those companies that that chain maybe that sell the diamonds. I think they're looking to most probably get the whole thing all the way through.
so they're going after the beers.
Most probably. All right, so no, the stores. There's little. I think there's shops on there.
Okay.
Anyway, we'll see. But I think it could be well received because I mean they're smart people. Now SXE, but really a sort of safety dividend stock.
Mm-hmm.
And again, absolutely fine. It's just a dividend stock put on as a dividend stock, long-term growth. Absolutely happy with that. Still a hold.
I think we must have felt very safe. Let's go for a dividend stock at the time.
Well, occasionally we've done that, Wolf. We've had a panic. We've had a panicky week, and then we got what's hot. What's hot is protecting my money.
Yes, exactly.
Now LAU's been very, very good. So that's been a good one. I don't
winner.
Sort of that's
all-time highs, Dave. That's all-time highs. There you go. 80 cents. Well,
all-time highs, and actually is the charts are still saying it's a buy. So Wolf, would you be buying LAU?
Okay, well let me have a look at the numbers, right? Because first of all, really good announcement, right? I actually, again, I spoke yesterday with, this is an interesting, right? So I spoke yesterday with Ausbiz, did a video with Ausbiz yesterday about 5 stories, right? What we normally do, promote the great brand of ES. And I had yesterday a theme that was positive reactions to results, right? So I had 5 stories that the market just went, "Whoa, we love this result. We're going to push it up higher." And obviously the charts look pretty good. So I went through 5 stories yesterday. This is one of those. I didn't talk about it yesterday, but this is one of those strong reactions to a result. Look at it. I mean, that green candle last week is extraordinary, right? And yes, I'd be looking at this for sure because it was my favorite result in this space, in this transportation logistics space, that still should do quite well over the next 6 to 12 months. So I'm liking this story, so I'd be still buying. So if I look at the actual numbers today, Dave, it's still not too expensive. I think we looked at it. I think it was what, 11 times, 12 times for you. I'll take it, Dave. It's not expensive at all for a company that's growing quite nicely at 20% clip. I'll take it.
All right, as they say, hold your winners, cut your losers. This is
Absolutely.
a winner.
This is a winner. You hold on. Absolutely.
Right. And yeah, we're doing really well in that one. So it's looking great.
It's a big winner.
Now, another one that's actually a big winner is this one. We put this one on about 47. We're not far off having a little doubler here, actually, Wolfie, already. And look at that chart. That chart says, hello, I'm going higher. Now, would you be buying this one now?
Dave, that's the one I put on Ausbiz yesterday. That was the longer reaction to a positive. And, we talked, me and Claude talk about this. I thought, look, it looks a little bit more expensive right now. Maybe take a profit or two around this 80 cents. But you know what? I'm going to change my mind again because that result made it cheap again. It went from expensive to cheap again. I'm back on the bandwagon, and then they're talking again a good outlook, another 6 to 12 months. This is in the buy territory for me again. So I'm changing my tune. All
right, brilliant. Now MEK, unfortunately, this little gold play, we had to sell it. We went below trend. This is the important thing, guys. Cut your losers, the ones that don't work, and hold your winners. Right.
Well, there's 2 things happened here. First of all, the results weren't strong enough. Second of all, gold fell back to.
Okay. MMS. So this was, I think, again, a bit of a nervy week where I sort of quite like the dividend, Wolfie, right? So, I thought
This is the week when I wasn't there, by the looks of things.
yeah, well, listen, again, safety, good P, not expensive, 14 times, good dividend, 7%, just going for a good dividend, really, going for a safety play. And guess what, Wolfie? We are hitting record 52-week highs today, most probably record 3-year highs. So hello. I had a buy
And
signal
Dave,
last week.
you know what you got in your favor again? Positive reaction to the results. Look at that green candle.
Well, in all fairness, Wolf, you did look at these results with me before I put this on around here somewhere, and they put an announcement out, and you were starting to warm to it.
Well, look, the thing is, it's a lot of it is about expectations more than the actual results themselves, right? This company for me is not my favorite company. It is just possibly maybe a dividend play more than anything, right? When we looked at the results, I remember looking, they were okay. There was nothing unbelievable about them. They were okay. So I was thinking that the only way this is going to go up if the market really, they beat the market expectations. And that's exactly what they did by looks of things, with maybe a brighter outlook here. So you've got that set up where potentially you've got that $15 now, right? Where, if you hold on and see what happens, and potentially you get a nice profit out of this. So yeah. Again.
But also, Wolf, we've been moving a little bit these hot stocks to sort of, good dividend paying stocks which are growing, right? They just been doing well on the markets.
Yep.
So another hot stock which was put on is CLX, and again, that's been a good one for us, Wolf. It's doing the right things. It's got as high as $2. Really, the price action still, if you're in that, you'd be holding it. It's taken us on a little bit of a ride this week.
This is opposite to the positive reaction to the announcement. It was a very negative one because they missed their own expectations. Remember how they said it at 90% and only came in with 82?
Well, and you know what? We laughed at the time and we said, okay, silly management, but possibly an opportunity, right?
Yes.
Because growing at 85, and again, you look at it, a P of 5, reasonable. I think dividend at the moment of 3.78. I think they were giving us a little bit more than that when we put them on. But again, if you look at the chart, it looks absolutely fine.
I can't believe they dropped down to 145.
I know. It's great.
That's ridiculous. Somebody picked up some bargain and a half.
Well, slightly traded, right?
I know, but somebody went, I'll sell it down because I've had enough. And there you go. Somebody's scored an absolute bargain.
Wolf, AGI was another one. So we got really actually quite interested in this, and it's come down. It's really hovered around trend for a while, but it's starting to look a little bit better. Actually, if it looks like this, I'm not far off a buy signal for this week.
Yes.
Maybe that is the catalyst. You can go back to that 120. Now we are down on this one at the moment, but if I was still in this, technically I'm definitely holding it. Fundamentally, I think we're holding. Are we, Wolf?
Yeah, keep the faith. The reaction was positive, even though it's not a huge green candle to the announcement. It's actually positive because it's up from last week, so that's a good thing. And I saw Macquarie put up their price target to 130 from 125, I believe. So all in all, this is definitely a hold still. I'm not losing faith in this. It's got the levers out there to perform quite well.
All right, SFR, which had again a really good move for us, but we actually did say to everyone take profits on this. So I don't know if many people are still holding it, Wolf. The reason it just had a good move after we put it on, I think it jumped a nice sort of 15-20% quick, and we saw a little bit of resistance at 7. I think then copper was starting to come off a little bit, so we did suggest take a profit on it. But
and I'm glad we did that, because the scary bit is now is they're shutting down the Australian operation and they're going to be stuck just with the Spanish operations, and how we feel about Spain.
Sí, señor.
I'm scared, Dave. I'm scared.
Estoy muy preocupado. Means I'm very worried.
Exactly. So I wonder why the other company was selling out of Spain. So because this is an acquisition, right, for them, I'm a little bit skeptical here. So I'd rather be out for the moment. So well done on getting out and taking a profit.
All right, here's a hot stock, which is a poor one, and we obviously had to sell that when it didn't happen and went through the trend line. But again, disappointed because we actually put this one on in a difficult time when we thought, oh, we're a little bit nervous of the markets. Let's go for a safe dividend paying
Yes.
stock. It just shows, doesn't it? Things aren't always that safe.
Nothing's ever super safe, right? And this is just the proof, especially when you got dividend should be fairly safe. No, you can still fall on your face, and you can see the market reaction, a big red candle, and it was falling ever since. Now, when you look at the actual report, it actually wasn't that bad, but they've missed expectations significantly. So for me, Dave, you'd probably you've got to get out of it and find another stock. So sometimes even the safe, you think to yourself, safe dividend stories, it might not work out. So we just got to get out, learn our lessons, and move on to something else. And this is one of them.
The next week we went for 2 gold stocks, and they had a little bit of a bump up, but the big one for us of those two was obviously Newcrest that got the takeover offer, which we then recommended people selling.
Definitely take a profit.
So that was a great little hot stock, really. That Newcrest, it did very, very well.
So one worked, one didn't. But again, it was all about that gold price. The gold price just didn't go on with it, unfortunately. So back and go down again.
But good winner for us. HAV, which we got a lot of hope for this one. So if you're in it, still hold it. Again, we're apprehensive that, or hopeful that this is going to be a good story. IGL. So here's another stock hitting record highs last week, and again looking very, 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 very good. And great.
Look at the reaction to the report, Dave. What a positive reaction last week. This is
and this is obviously a buy as well. So excellent. Now the next week we put on Microsoft, which was actually good timing because Microsoft the next day did actually I think that the next week did 8%, which Microsoft doesn't. And we got excited about the chat GPT. The markets got excited about it. Microsoft is down a little bit since then. So if you're short term, maybe you sell it if it goes through that trend line. But we do like Microsoft as a long-term play, and I think that chat GPT.
Put it on a monthly. Can you put it on a monthly?
Yeah, sure.
I think that's what we're going to be looking at this on a monthly, and it's still looking very, very good.
If it goes down to that 36, just nibble away. Really, I mean, especially if we do get more. How do you say? More war. We do get more
volatility with.
I think there'll be a lot of money going to Microsoft. Microsoft. It's really safe, strong company.
Oh yeah, just wait till Bing starts trying to challenge Google as a search engine. Oh my God, it would be like this. Microsoft could be the next Google. They go up to trillions and trillions of dollars of valuations.
Then 3 weeks ago we went for this little one, which is LYL, right? So, and that has been an absolute bull terror for us.
Yeah, it was.
Absolute, I think it's done about 25%, and still looks good. But if you're in it, you have a stop loss, and maybe that stop loss, I'll try and give you. Let's be a little bit tight on it. If you're up 20-25%, I don't know, what you could do. But if you wanted a really tight stop loss, I'll tell you what, below that 840. Maybe get out, right? Take a profit, right? We're here to make money, not just always sit here on stocks. But if you've got the long-term view or the medium-term view, Wolf, it's still a hold, and most probably that stop loss would be, maybe just somewhere under $8. Okay.
Yeah. Or even lower, maybe even 750 or something like this, Dave. The reason why I want to give it a bit more because that's really strong, big green candle that we've had. So I could easily expect it to come back with a market volatility. But if you look at it, it's cheap. So you want to give it a room to breathe, right? You want to give it extra room. He's trading on 10 times. He's got a dividend deal of 12, and you come up with a very good result. So you
could use that. That high. That's 742. Okay, was resistance before. So you could use that 739 as a stop if you wanted, Wolfie.
Hopefully it's not going to come back there because it's cheap. So, but you just never know. That's why you want to give it a little bit more.
Would you? Yeah. And this one, I presume would be a buy for you on weakness, would it?
Well, I don't want to chase a story that's gone up like ridiculous like this because it normally comes back, right? Gravity is normally pretty strong. So around maybe 8, my first nibble would be, and below anything below 8, I'd be looking to maybe pick up some more for the longer term.
Now, Lavisa came under a lot of criticism for this, but I did have a nice 5% move, Wolf. The week of
you had to explain yourself quite a long way.
Yeah, I know. I felt like I was I was in the doghouse. You said, "Dave, retail." But you saw the logic in it when I went. And listen, there's nothing wrong with the chart. It's holding up fairly well, and I think most of the brokers are around 20, 26, aren't they? 25, 26. So not too bad. And of course, what did we go for this week was this little IPG. And Wolf, the chart for me was like way too sexy for its line.
Dave, look at the reaction to the results, and we love that. I love the reaction to the results because it gives you almost like a window into what might happen over the next 6 months. Because it really, at the end of the day, if the market likes the results and they've got a pretty positive outlook, because otherwise they wouldn't have a good reaction, then you can fairly confidently say, I'm expecting to go higher. I mean, that's my expectations. I'm expecting this to go higher over the next 6 months. That's why you want to pick those positive reactions to company announcements like that.
Yeah, and again, this one is a buy. So if you're not in it, buy it.
Yep.
All right. So, Wolf, that's the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Our last 19 hot stocks. How do you think we've done, Wolf?
Well, I'm just looking at it. I think there's only 2 sells out of that, right? Well, 3 actually. So you've got SFR and AZJ as the sell. The others are hold. The others are great guns, right? So overall, I think it's incredible. Pretty good.
Yeah, we had a lose on MEK, a lose on AZJ. EVN didn't really go on with it, but the rest are looking pretty good, aren't they?
Yeah, but look, again, with EVN, it's the function's not a bad company. It's the function of gold price. Yeah. It happens. So it's not our fault. I'm gonna keep my hands out of that. But the rest of them, I think it's either a hold or you will take some profits, or you're laughing because they're going so well for you.
All right, pressure on for this week.
Yes, exactly.
Yeah, okay. See what we can come up with. Hopefully,
I'm sure you're going to steal something from me or one of our members
or Claude. I'll work something out. Yeah, I'll steal something from Wade. Don't worry. All right. On that note, thanks, Wolfie. Thank you very much.
Thanks,
See you, mate. Bye.